Hello, everybody. Hope you guys are doing well today on this beautiful Thursday. Glad to see you. I'm going to give it one more minute, let some more people jump on, then we will get started. Interesting. Okay. Can you hear me now? You can hear me? John Norton can hear me? Can anybody else hear me? I'm going to assume you can hear me. If you can't hear me, that's okay. Let me know if you still can't hear me. Also, let me know if you can hear me. Thank you. All right. As I was saying, sorry about that. Options involve risks. They're not suitable for all investors. As always, consult with your financial advisor before engaging in any type of financial product. Everything we're going to be talking about today is backward looking and not forward looking. And it's for entertainment purposes only, educational purposes, we could hope for, entertainment purposes, hopefully. So, with that being said, we will go from there. Sorry for the mic issues. Not quite sure what happened, but I'll never hit the music button again. I'll say that. So, with that being said, let's jump right in today. Opening range breakouts. If you've used them before, you can put them in the chat. If not, let me explain what an opening range breakout is. A lot of times, it's a very popular strategy with futures traders. So, if you've traded futures before, you've probably heard of it. But basically, it's very simple. The idea is you take the high and the low of a certain amount of time, and after that amount of time, you break out. If there's a price breakout, you do something. Now, most strategies would be like an opening range breakout. You go a break of the high, you go long. A break of the low, you go short. Perhaps you fade it. There's a bunch of different ways you can do that. But what we're going to look at today is some different options trades that you can use to do that. So let's jump into it. And as always, ask away. I believe my trusty partner in crime, one of them, Mr. Matt, is going to jump on here in a minute and talk through it. But let's go for right now. So can you guys first off, see my screen. I want to make sure everybody can see it. Everybody good on the screen? Sweet. Okay. So what we're going to do is we're going to look at some different strategies. I will say straight away, this is tough going. I was very excited when we came out with the breakout feature because this is kind of how I trade futures, personally speaking. Um, I will play breakouts and things like that. But the results for options are not, they're not what I wanted them to be. And there's a couple of caveats that I need to throw out there first. If you have an opening range breakout strategy you like, a lot of times the way you'll adjust or the way you'll play it is you'll exit if we break back in, if we go back into the range. Um, we don't have that feature, and so if you do that, if that's part of your thing that you do, what you can do is you can export the data through TradingView, if you use TradingView, and use the CSV tester. That's what I was doing previous to this feature coming out. Obviously, it's a lot quicker, a lot nicer to have the feature as it is now. Saying that to say that the results are not as good as I wanted them to be, but what is interesting about it is it kind of shows, in my mind, um, something. This is where options don't necessarily play nice with this type of feature. And the way I explain that is like you have a future and you're going long. A lot of times you'll have a take profit. Again, you might set your stop right inside the range again. If it goes back in, you might have a trailing stop, something like that. Um, with options, there's all sorts of other things at play in that. And so you have vol, obviously being one of the biggest ones. You have time decay. You have a lot of things working for you and against you, depending on how it works. And so straight away, we're going to look at all these tests. But the thing that my biggest takeaway from this was that the results show that the strategy itself, it's not like some crazy 90% win rate on the strategy alone. The idea of saying we have this range, you break out, it almost always continues to go up or it continues to go down. That is not the case, right? And so management of these positions is key to that straight away. So I'm just going to go through it and we can go from there. So I'm going to start with the not interesting test. I'm going to save that one for last. The first one is a classic type of play. Okay. It's using Tesla. That's right. We're going to Tesla. I'm going to put this in our chat if you can see that. And what this is, let's just go through it. This is a 7-day call. Now, any guesses why we would do a 7-day call in Tesla? Just put it in the old chat. This is amongst friends. This is a little first cigar lounge of the year. We're easing into it. We're amongst friends today. So put it in the chat. Why do you think we would use a 7-day call? That's exactly right, Ryan. Thank you. No dailies. So, I mean, we're going to have a Friday expiration, and so to play that, the way we want to play that here, at least, is to give it a little bit of time. There's not 0-day expirations for equities, and so we want to give it a little bit of time. What are the criteria? What is the criteria for this? I am opening it daily, so I'll do it any day that this happens, but I'm always going to choose the 7-day contract. I'm allocating 20% of my portfolio. We're going to talk about allocation in a minute because it's actually a big part of these type of strategies. And the thing we're doing is a 945 opening range. Now, the majority, at least the ones I've seen through the years, the majority of the ranges I see are like 10 or 1030. Like an opening range breakout with futures is usually going to be 10, 1030. We're going to look at a couple different ones. It's interesting. So, but this one is the first 15 minutes of the day. And shout out to, I don't know much about them at all, but I actually found a futures version of this on a tweet by Trend. I think it's Trend Spider. I'll put it in the show notes. Um, oh, heads up, guys! Joining us now is Mr. Matt from Option Omega. Matt, can you hear me? Are you doing okay?
I can.
Uh,
I'm cameraless today.
I love it. I assume then are naked. So, uh,
That's incorrect, but we're not going to verify.
sure. Okay. I will go ahead and continue assuming that then. So,
Thank you.
um, as I was saying, Matt, I'm going to leave you on. You can mute and then just unmute whenever you want. Um, the This is a 15-minute breakout, and I'll put it in. We'll put it in the show notes, like there's show notes, like we know notes for shows. I'll put it somewhere where I found the futures version of this. I found this futures version. I was like, well, I'll test it. It's interesting, but it's a 15-minute breakout, and after 9:45, basically, if we've broken out, we're going to buy this 7 day. The exit conditions are very interesting because you have a stop, a very tight stop, 5%. And you have no profit target, but you're going to exit the trade by 3:30. So you're putting this on any time, but you're exiting at 3:30. And so if you look at this, you also are going to open the trade between 9:46 and 10. So it's a very short time frame type of trade. You have after any time after 9:45, if we have broken out of that range, we're going to buy a call. But we're only going to do that up until 10 a.m. So this is a 15-minute window of time that we're looking for. The stop loss is 5%. We're going to get out by 3:30, and that's it. What's interesting about this is, well, what's the first thing you kind of notice about this? Any takers in chat land? As you look at this initial test, is there anything that pops out to you that's interesting? 20% win rate, yeah. That's a very, very low win rate, right? And yet it's a profitable strategy. So why such a low win percentage? You are just getting stopped out all the time. But what's interesting is, let's play with this real quick. We're not going to do this with all the tests, but I'll just show you. Let's say we put this at 10%. Does okay, right? I mean, let's compare it. Oh, I have a previous test and I can't compare it. Uh, the MAR is still kind of the same. Let's go 20% stop loss. You're doing good, a little bit better MAR, right? But what's interesting, if you keep this going, let's just go crazy. 50% stop loss. You're getting better, right? But here's the thing that you'd want to test with that. In real time, one of the things that I personally, with that type of trade, would be careful of is Tesla's going to be fine largely, but some random stop outs on the stop loss, because equities have a different way of behaving. And so that one's interesting, right? Like it's a tight stop. You only win 19 times, but you win, it's a winning trade. You can increase that. You can keep going. You've got the test. You can keep testing it. But the thing that I wanted to start with that is to say the 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 there are trades where the parameters, all parameters matter, but there are certain trades where the parameters matter more than others. And with this type of trend strategy, I think that the allocation is super important and the stop loss is super important. So I wanted to show that just to say you're increasing a little bit. Your Mars like definitely better, um, but it's not like it's going from like 1 mar to 100 mar or anything like that, right? But that's the fun of it. It's a fun idea. Um, I know that at least a lot of people since the stock split don't trade Tesla quite as much as they used to. But I thought that was a fun one to look at. So we'll keep going. Next up, we're now in SPX land. And again, these aren't necessarily my favorite types of tests, but I wanted to show you some different ideas today. So I'm going to share this. Okay. What is this? This is the laziest thing you could do, but it is an interesting idea. So, like I said before, most opening range breakouts are opening range, right? And what's the opening range? Usually it's 9:45, 10, 10:30. But we have a cool feature upon our hands now. So I thought what would be interesting is if we were in a range all day, a range up until 3 o'clock. Let's say we had stayed in a range from the open till 3 o'clock, and then we broke out. We broke out after three of that range. Someone could say that's a squeeze, something like that. We're using the high only. So this is an opening range to the high, and you're breaking out post 3 o'clock. So you put that on, you buy a call, and you buy a 50 delta, and it's a 1 day expiration. Now, what's crazy about this one is this is literally set it and forget it, which is not necessarily my favorite types of trade, but you put it on, and you have this 15-minute window again, a small window. You're allocating 100% or 50% portfolio. Don't ever do that, right? You can run this test yourself to see why. Um, and that's it. So this is kind of a classical, closest to futures you could get, except for we're not playing the decay. We're because we're long. We don't want to get decayed to death. Uh, this trade's interesting. I mean, the Mars okay. The Mars pretty good. The drawdown would kill me. I don't. Some people love those type of trades. Long strategies like this, long premium strategies. Sometimes you have to eat a little bit more withdrawal or drawdown. Mr. Matt, do you have any thoughts about this test? Does this test excite you?
Uh, I don't know if it excites me or not. I answer that because I'm currently, as we're talking the past couple of days, I've been looking for some trades that I call jalapeno trades, which are trades that I might want to work into a portfolio and have a low win rate with a high payout. As a matter of fact, Mr. Motato and I were just chopping up some broken wing butterfly debit trades on the Discord. Shout out to the OO Discord. And when I look at this, that's the first thing I think of is, um, I mean, this doesn't have a low win rate, um, but the wins are, the max winners and are going to be a lot bigger than the average losers. It's just, can you stomach a trade being a zero? And I think that's a different answer for everybody. But for me personally, I'm trying to find plus PE trades to work in that are debit trades that I can add to my existing stable in very small quantities. So I think of them like a spice or a jalapeno or something like that.
I like that. I like the jalapeno. Yeah,
There you
this
go.
is not a trade that excites me, but it's what I would do with this is these are kind of ideas. ideas of open range breakouts. So you think, you know,
Exactly. Exactly.
um, so we'll keep going. That's but the idea between this one. Hey, why do 10 o'clock? Why not see a different range later in the day? If we've been in a range later in the day, what happens if we break out then? Um, let's keep going. Okay, we're going to go to Apple. We're back to equity land. Um, this is a interesting one to me. This is we're going to get into mean reversion a little bit. So what we're doing with this one, let me share it. And real quick, while we're amongst friends today, what do you get? Do you guys ever trade Apple and Tesla options? I know some people go through seasons where they do a lot, and some people don't. I'm always interested in that. This is an interesting one because this is a mean reversion. So this is a 15-minute breakout again. First 15 minutes. This one we're going to 10:30, so you have a 45-minute window once that breakout happens to put it on. Um, and what this is, if you look at this, this is $0 from the current day's open. So the idea is wherever we opened at, if there's a breakout, I want to play the reversion. And so I'm going to go super wide, and it's basically like a synthetic, kind of a poor man's straight. It's an iron fly, but with that far out, 10 bucks out on an equity like Apple, I mean, you're really kind of doing a poor man's straddle, short straddle. And so you're doing an exact DTE on this one, which is interesting. 7 days you have to more or less. Uh, exact same strike offsets, 100% of the portfolio. And here's the exit conditions. We're just simply going to take 5%, or we're going to be in the trade for a couple hours, 240 minutes to be exact. Um, or we're going to exit when we move $5 in either direction, direction past the short, because it's a straddle, so it'd be $5 in either direction. We have the Punisher on, require 2 hits, adjusted for equities, depending on what your brokerage is and all that stuff. But again, this one's just a mean reversion. Um, on any type of breakout early on in the day, we're going to assume that we will revert to the open at some point. Um, that does pretty well. Any thoughts about that one? Matt, are you an Apple guy?
Man, the only thing I got is just occasionally a few Apple puts here and there. This is way too fancy for my Apple, but I like it though. I'm gonna have to look at this a little bit.
It's a nice little reversion. You know, this is if you do type of automated trading, this would be an interesting one to put on.
Yeah, I mean the average minutes in trade are less than 3 hours. I mean the downside is people would be like, well, you're capturing 2%, and my counter would be like, you're in it for three
Yeah,
hours.
yeah. It's a
So
just a little nibble. It's a little nibble trade.
yeah.
So, all right, we'll keep going. Okay, I keep muting myself by accident. I'm gonna share this. Okay, what is this one? This is a put butterfly on a breakout to the upside or a breakout to the downside. So we've been, but the Apple one was both too, but the other ones were just to the upside. Well, this one's interesting because what we're doing is we're buying a put 30 points down, selling three, actually it's a ratio butterfly, 35 points, and then buying the cheapest puts we can. So it's a very broken wing, trying to do it like again a poor man's ratio almost. Um, and this one's a classic one. Between 10:31 and 11, a 30-minute range here. And the opening range we're using is the first hour of trading. The only exit condition is you exit when the put is tested. So does that make sense to everybody? I want to make sure everybody understands kind of that trade. You can just put it in the chat. Oh, did I not get the link? Sorry. There you go. It's a broken wing butterfly, a ratioed butterfly. The key on this one, if you look at this, is you're almost always going to get a credit. I should really put minimum premium for that. You just double check through time. Um, but the put tested is kind of butterflies are interesting. I'm going to do another cigar lounge on them I'm going to do one on the deltas feature that we have, because butterflies, it really depends on where you're at and time in the trade, as whether that short put touching it is going to be a profit or a loss. And sometimes it's totally dependent on the time. Um, in this case, the way we're putting this on, and because it's ratioed, probably going to be a stop, more than anything else. But we'll see. Yep. All of them are going to be put tested. So that's your stop out, is if you get down to the being a put tested. You could test taking profit at different times, but I thought this was an interesting one, a 9 MAR, for, again, a relatively, the trade itself, like a butterfly. I know people see these as complex, but once you do it a couple times, you start to understand the mechanics of it. But this one's pretty interesting, and I like this one actually because you have a lot more data on it. You have 163 trades as opposed to some of these where you get 24 a year, or something like that. This actually happens quite a bit because, again, it's a range. The first hour. How often do we break out of the first hour's range? Well, we do it quite often. I mean, we do it 163 times last year. So I kind of like that one. The key to that one is you want to collect the credit, because if we revert back up, or if we go to the top of the range or break out of the top of the range, we don't want to get punished for that, right? So you really only getting punished in this trade is if we continue to go down on a breakout down, or there's a breakout up and it goes all the way back down through the bottom range. Um, so Matt, broken wing butterfly, any takers?
Um, I usually do broken wings the other way.
Mm-hmm.
Um, so I have not played around with breaking the wing to this direction, but I think that this trade, I mean, I want to spend a little bit of time with it, but it looks like it's done really well. Can you easily run it back to the start of dailies and see how butchered this gets during the 2022 chaos?
Yeah.
But I think you made it pretty safe, which is, I mean, for being broken wing to that size. I mean, it still has an 85% win rate even through a very dumpy time period.
Yeah, and the key to that really is just to make sure you collect a credit. Um,
Yes.
that's with
Yeah.
those type of trades. You want to collect a credit. These personally are my favorite types of trades, but you got to collect a credit, and you've got to have some sort of like exit criteria, because the last thing you want is
Yeah.
for it to blow past the short and be like, well, it's gonna end
Yes.
at that short perfectly. Like, well,
Yes.
sometimes it will, sometimes it won't.
Maybe.
Yeah,
Yeah.
maybe.
What's interesting about this too is it looks like I'd have to look at it, but it looks like the losers have all been here lately too, which is interesting. Or I mean, not all lately, but the last three. Um,
Yeah, I mean, you definitely have some in the fall. Um,
yeah.
oh,
Oh, do you have it sorted by losers
yeah,
maybe?
yeah.
looking at their song. Okay. Yeah, disregard that.
No,
Yes.
you're fine.
um, I didn't realize it was filtered for that.
You're fine.
But I mean, 257 trades is, I mean, that's enough to play with, I feel like.
Yeah, and I like
And
again.
again, I mean,
We said again at the same
it's
time.
0 day, so I mean, you're in it 5 or 6
Yeah,
hours. So
exactly. I like that one. Actually, that's one of my favorites from this one. And in a list of
super
things I don't
interesting.
necessarily like, it's this.
Yeah. And speaking of, I've got to run, but thanks for doing this, Troy. And I think we're gonna have to do a jalapeno trades um, cigar launch here pretty soon
Yep,
of some trades that may not want to base a whole strategy around, but maybe sprinkle in a little bit here or there.
yep. I love it. Shout out to Matt.
All right.
Talk to you guys later. Talk to Matt later. We're not
All
leaving.
right.
We got more test to show.
See you guys.
Okay, so the next one is interesting. Just shared it in the chat. This is you're going to sell a condor on a touch of the low. Okay, but it's not a delta Nutra condor, and so opening range breakout the first hour. You're going to do this if we break out basically anytime between 10:30 and 11, and you're going to sell the 50 delta put spread 25 wide and a 25 delta call spread 25 wide. Your only exit conditions are a stop loss 25% or a trailing stop after 10% profit. Okay. The MAR on this is actually pretty good. I mean, this is an interesting, you know, this one has some interesting things going on with it. Um, you could play around with the delta, but does it make sense why I put delta that way on a touch of the low? Any takers? This is purely just fading that move. I mean, you think it's a touch of the low, you're a breakout really, but you've gone to the low, and now we're going to get some positive deltas and play the reversion back to the mean a little bit. That's as simple as it can get. Um, but it's an interesting trade. So we've got two more. These are actually my favorite ones, even though they don't have enough data to really to my liking. But okay, so this idea basically is a similar thing, but it's as the first one. It's a 3 o'clock breakout. So after three, we're going to buy a broken wing butterfly. Just a simple broken wing butterfly. It's ratio to maybe not that simple, but a 20 delta, buy the 20 delta, sell 20 points above that, and then buy 75 points away from that 20 delta. So see here, sometimes you'll get a debit, sometimes you'll get a credit, but it's going to be a small trade any way. But the MAR is pretty high for this one, and I like that. I like high MAR. I'm a high MAR guy, and so again, small data set, but that one has some interesting ideas behind it. Any thoughts as to why that might work amongst friends? I mean, personally, I think the reason one day it the theory, at least this is the way I like to think through this, is if you're breaking out at three it probably increases the probability a little bit that overnight action will be a little bit higher and that the next day you might open a little bit higher. Um, that's kind of the idea behind it. And because suddenly that one day is now a 0 day, you have this wide butterfly wing. It's probably going to be a little bit farther away. Unless you have some crazy move above it overnight, you're probably going to, there's perhaps a higher probability that you might get some profit, you know. Um, I'm going to show you another one of those for the final one that I think is super interesting. So interesting that I named it interesting. So I'm going to share this. All right, last one for the day. So this is the similar idea, but this one's kind of wild to me in that it doesn't necessarily make sense why this is the case to me. But I've ran it enough times in various ways to know that I trust our data. So same thing, 3 o'clock to 3:15. We're only playing this the first 15 minutes of that breakout. Um, this is a 5 day expiration, which again, an opening range breakout strategy, 5 day doesn't make sense, but you're buying 100 points away and you are selling to 10 points above that and you're buying a call 50 points above that. So it's broken wing again. This one, you are requiring a minimum profit, or sorry, a minimum premium. Wouldn't it be great to require profit? Um, you requiring premium. So this has to be open for a credit for this to work. But you might look at this, you say, like, that's a low MAR. I don't like that MAR. But that's a little deceiving, right? Because you have only put 37 trades on and through a number, multiple years, right? And so sometimes when that happens, MAR can be be deceiving. Good question, Ram. The opening range here is at end of day, like we were talking about, where the idea is you've been in range a range all day up until 3 o'clock. So whatever, if you've been in a range from open to 3 o'clock, right? That's the range. Okay. So at 3 o'clock, if we break out of that range to the upside, we're going to put this on. So it's a daily range. If we go out of that, whatever the range has been from 9:30 to 3, if we break out of that at 3 for the next 15 minutes, if it happens, I'm going to put this on. Theoretically, options involve risks. Um, and you're collecting a credit, and the profit, the exit conditions are kind of my standard broken wing butterfly exit conditions because we want to close some as we get profit, and I want to at least shoot for the moon on some of these. All right. Um, but that's interesting. I mean, listen, anytime you get a multiple year 100% win rate one, that's interesting. You gotta kind of think through it. Obviously, you'd love to see like 100 trades or 200 trades or something like that. Um, that was where was the drawdown? Good question. So if you look at your loss on some of these, you get pretty big drawdowns. And so through time, what that's going to look like is a peak to trough while you have this on, you're having a drawdown. 100% win rate, obviously the drawdown wasn't realized, but peak to trough, you were having a drawdown during that time frame. And so some of these were getting to be big losers. And how that works is probably, see how that works. Let's find this 2,300% loser. Or not loser, 2,300% drawdown on that. What was happening was you put the trade on, right? And it slowly starts losing as the underlying goes up, right? Because you're 5 days out, so that you have a broken wing butterfly. So, and it's ratioed, or sorry, not ratioed, but it's uneven. It's a very broken wing butterfly. Um, so as the day is approaching, the days are approaching, and the price is going up. If the price moves too fast up, you will have you will not be in profit. You'll be losing. As time, but time is in your favor as long as it's below that short strike. So in a perfect world, what you want with this type of trade is maybe the market doesn't do anything the first couple days after that breakout, but slowly through time, let's say over a 5 day period, you have a 15 points a day up move. You want it to slowly go to where you can take profit. Because if you suddenly woke up the next morning after you put this on and the shorts were, it was at the short strike, that would be a loser, right? Now, 100 points away, you don't have that often, a lot of times. Definitely you'd want to run this back as much as you can, do different variations. But again, it's an interesting trade. So um, I hope you guys liked it. Again, closing thoughts. It's not. I was a little disappointed. I really wanted to find like my perfect option strategy. I love playing. That's correct. Yeah, during the trade, I wanted to play find the perfect option strategy. I still haven't. I like some of those broke wing butterflies. I have traded that way before. Now that it's automated and I can keep looking at the data, I'm going to keep running the data and see it. But there are 4 billion types of ways to play options. And so hopefully that gave you some ideas of ways that you can play that type of range breakout. So any questions about that? And then I had one more question I was going to ask you guys. You just put it in the chat. Here's a quick question. One of the things, it's January, 11th? Um, I've already seen in the Discord a lot of people say, all of my strategies that I were running last year aren't working now, which happens every year. That's part of the fun of backtesting because it's backward looking. Would you guys have any interest if I did a weekly cigar lounge where we test what's happening year to date? Every week, we go through trades that are happening year to date. One of the things that's always fun is the end of year trades of the year show. And some of the feedback I got about that was like, man, I wish I could have seen that was happening in March. I would have like adjusted it. So I had the idea of what would be fun is if we did this together through time, figure out trades that are working year to date, and we can go back each show and continuously run them, see how they're doing, and then maybe go from there. Any takers on that? Would you guys be interested in that? Thank you, Robro. Okay, we might do it. We might do it. I'm going to look into it. So, um, that'd be a good question, John. That'd be a we could do it both ways. We could see year to date if it's working, and then we could run. Probably the way you do it is last 90 days, and then kind of go back to year to date. I mean, obviously, we're gonna have 11 days. If we did it today, but um, that's the fun of it. It's just we'll see. Who knows where the VIX is going to end up in December? Uh, Personally speaking, I know nothing, but my guess is it's not going to be 12. So it'd be fun to see what happens um, through time. So um, I'll report back. But guys, I appreciate you. As always, if you have any questions, feel free to jump in the Discord. Uh, thank you for joining, and we might do that here pretty soon, but we will do something pretty soon. So appreciate it. Hope you guys have a good rest of your day. So we will talk to you soon. Bye bye.